Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is September 25th, 2016, and we are here to talk about the weekly market review. But before we do so, let me direct your attention to the bottom of our webpage. If you look to our disclosure statement, the area I want to highlight in particular is this section right here, which says that our products and services are provided solely for educational purposes. Written and verbal statements, including those provided on our website by staff members, testimony individuals, affiliates, and clients, are personal judgments and should be regarded as such. These written and verbal statements do not constitute investment advice. We are not licensed financial advisors. The government does want us to let you know that. So please, before you make any trading decision, make sure that you consult the advice of licensed financial advisors. We are just simply people who look at charts and give you our opinions on it. So, that being said, let's go to the chart of the week. And the chart of the week that we're looking at is the SPX as always. It is the major index that we focus on the most. And as we look at this, last week we were talking about the potential of the market going higher if the Feds did not hike interest rates. The Feds did not, and so we saw this jump in the market that we saw right here. Now we had this pullback right here. So what does that all mean? Okay, could mean a number of different things. All right, so the first thing, and I'm going to make a case for both the bears and the bulls. Okay, and I'm going to make the case for the bears first, but let me be clear that we are still bullish in this market, not bearish. Okay, so the first case I want to make for the bears is the fact that even after the Feds came out, the market rallied, but it rallied right to this level right here. Okay, and then now it looks like, it had a steep pullback the other day, okay, or yesterday, or should I say Friday, it did. Okay, so that is a little bit troubling because of the fact that we would have wanted to see the market actually take out this resistance, and since it didn't do that, then you always have to wonder, is this something that is showing us signs of weaknesses in the market? Okay, so that's the first thing. The reason why we don't feel so strongly about that, even though it is a resistance, we have to respect it, we have to acknowledge it. But the reason why we're not putting too much emphasis on this is only because we don't see no candlestick reversal signals. So that's the first thing, and I mean that would be the biggest, weakest point of this. Oh, the second thing is the fact that it came here and it filled this gap that we see right here. So this gap from here to here, from this gap right here to here, is not uncommon for it to fill it before it starts going back up again. So that is, part of the reasons why we look at this and say it's too early to say that this is going to come rolling back down. Okay. Now, if Monday comes around and we see it start going lower, then that could be a problem. Okay. But at the end of the day, again, we're looking at this level right here as the level of support. So one thing that you can look at is, another thing you can look at as far as the bearish is concerned is if we then, take this, let me extend this to the right, all right? And then we take this and duplicate this line, and what we do is maybe bring it to somewhere down here like this, okay? So now we have the beginning of a downtrending channel. Okay, so those are the cases for the bears, all right? So if the market does continue down, then we can expect it to come down to somewhere around here before we see this bounce take place again, all right? However, that is all we see as far as the bears is concerned, okay? The case for the bulls is the fact that, like we talked about last week, the market had a resistance level somewhere around here, okay? We expected it to bounce. It did. I did take it to a smaller time frame to kind of show you that all the cluster that was taking place over here was showing you signs that it was trying to go higher, and that's exactly what it did. Okay, if you go back to the video we did last week, you'll see what I was talking about. I very rarely go into smaller time frames, but I did that only because we had all these clusters right here to kind of give us a better picture of what was taking place inside this cluster of candlesticks, to kind of give us an idea of where this market is trying to go. Now, if you understand candlesticks, you would have seen candlesticks that would have told you information all around here that was telling you that, yes, it's ready to go higher. So the only question is this the highest it's going to go and then pull back because of this channel, which we have to respect if that's the case, or is this just a pullback to fill this gap before it starts going higher, and that's something that we have to wait and see. Again, the question would be if we see it close below here, this level right here, if we see it close anywhere below here by Monday or Tuesday or Wednesday, anytime next week, then there's a chance that it could, continue coming down. Okay, so again, that's the case for the bears. We just have to wait and see what happens. All right, going back again to the bulls, we see that we had this bounce off of here. Now, if I was to, let me remove these lines right here, and if I was to go to the weekly chart, which is now a bigger time frame, all right, one of the cool things that we see for the bulls is the fact that if you look over here, all right, we had the market reach this resistance, come back down, came all the way to this resistance, came back down, came close to this, came back down, came close to it again, came back down, came to this resistance again, came back down, and then finally it broke through it. And if you've been watching any of the videos I've been doing for a while now, you'll notice that I was saying that it is not uncommon for us to have a pullback back to this level right here, and that's exactly what has happened. And now the market is trying to head back up. The good thing on this is it's giving us about two different reversal kind of signals, two bullish reversal signals, and that's a good sign. One of them is already confirmed, the other has not. Okay, but the fact that we have a reversal signals or two reversal signals right here is a very good sign, and that could tell us, week to week, this market is trying to go higher. The week to week, this market is trying to go higher. So when I look at the bigger picture, I see a chart that is strongly favored to the bulls as opposed to the bears. But again, we have to pay attention to what we see on the daily chart and say, hey, you want to watch out for that. Okay. And the same thing goes for the rest of the index. Let's go to the Dow Jones Industrial real quick. If we go to the Dow Jones Industrial, the same situation, the same scenario is playing itself out. Okay, I'm gonna go to the weekly chart because I want to focus more on that. And what you will see here is, again, if we draw this line right here, where we have the market, coming over here, resisting it and then breaking through. Now we see it coming back here and showing some signs of reversal, ready to start going higher. Okay, so that's the case for the bulls. And I look at the weekly chart as of a stronger indicator than, or stronger information than the daily chart. The higher time frames is always stronger than the lower time frame. Why is that? Doesn't mean that the lower time frame cannot give you, some clues as to what's about to happen real quickly. But the bigger time frame is where the lower time frames will end up following. So the lower time frames will always follow the bigger time frame, meaning that the daily chart will always follow the weekly chart. The weekly chart will always follow the monthly chart. The monthly chart does not follow the weekly, nor does the monthly chart follow the daily chart. Okay, so if the monthly chart is showing big signals or big information, I will pay more attention to the monthly chart than I would the weekly. I'll pay more attention to the weekly chart before than I do the daily chart. I'll pay more attention to the daily chart than I would hourly or the 30, and so on and so forth. All right. So when I look at this again, we see a chart that broke out, retested, and I've been talking about that. That is not uncommon for us to see a retest before it starts going higher. And this is kind of like almost a chance of basically giving people an opportunity to say, hey, here's your second chance before it really takes off forever. Okay, and this is your chance to look into that as well. If we go to the Nasdaq, we have something very similar again taking place with the Nasdaq. All right, and basically it's this right here, and now the Nasdaq came down. It's showing us a bullish signal as well that is confirming on the weekly time frame that is telling us that it is trying to go higher. And if we go to the Russell, okay, so the Russell is the only one that we can't really draw a diagonal line. However, if you look at the Russell based on this horizontal line right here, you can see that the exact same thing is happening again, and also giving us bullish signals. So that's the thing about it, is they're all giving us bullish signals at the new level of support, okay, on the weekly time frame. Let me repeat that again. All the indicators are giving us bullish signals, bullish reversal signals at the new level of supports. Okay, so those are very strong case than the bear case that I presented earlier in the beginning of the video. Okay, so here we are again. Resistance broke through. Now it came back, retested, and it seems like it's ready to start going higher. And then lastly, we'll show you the chart of the Dow Jones Transportation. And the Dow Transportation is the only one right now that is still lagging behind. out of all of them, okay? And what we are looking at is the fact that, it's been going sideways on the weekly of this, okay? So we really need to see the Dow Transportation, kind of break out from this range that it's in right now, okay? And that's what we're looking at. We just need to see it break out from this range right here. And I would say this: if the market should come down here and close below this line, but more importantly, this line right here, this is the point of no return. I would say watch out below. We have problems, okay? And what we really want to see is the market close above this line, but more importantly, it would be really, really cool to see the market close above this line right here, this red line up here. If we can see the market close above that, I would say kiss the downtrend goodbye and jump into it, riding this trade going up north, okay? So that's pretty much it as far as that is concerned. Again, just be patient. Look at this market now. Let me do one more thing before I do that. Let me go to the monthly view, okay? And let me remove all drawings. Okay, so here's what I want to show you guys is that if you look from here to there when the market dropped, okay, that was the bear market we had in 2008, okay? Now we have the same thing happening right here, and I know a lot of people are wondering, oh, is this market going to keep on going down? Is it going to do that? Is it going to do that? But, if you look at this, it's almost about the same, price point, from this top to this bottom. It's almost about the same length from that top to that bottom, okay? So if I was to let's say we did this, we duplicated that, and let's bring this to the transportation index, we've got a good portion of that move to the downside, all right? We are talking about somewhere around here. Oh, that's a wrong way to draw that. Let me redraw that. Okay. Boom, right there. So we're talking about we've got a pretty big drop like we saw in 2008, okay? And at the end of the day is, we've already seen that, and now the market is looking like it's trying to reverse going back up. And it could do something like this where it took, from here to here, which was about 11 months, 12, pretty much a year of just, kind of not really doing anything before the takeoff really started. So, I hear people talking about the election and if that's going to be the catalyst. I don't know, nor do I care. What I do see is a chart that is, in the beginning phases of its next rally, okay? And, 2015 was the correction that everybody's looking for, but while it happened, people were blind to it. I mean, it happened and people saw it, but it's like, no, we want more, we want more, we want more. And it just doesn't work that way, okay? The charts are telling us that things are beginning to change for the better. Now, people are complaining about the government and the feds and the manipulation and all this stuff. I've heard people say, I don't want to get involved in the stock market because it's been manipulated. And, all I have to say is everything is manipulated, okay? The question is, do you know how to play with the rules and use that to your advantage? That's all it comes down to. And I'll use a quick example, sports, okay? To think that sports is not manipulated in a sense that, there's a controlling body that tells you what rules you can play by, okay? So, for instance, if in the NBA, the National Basketball Association in the United States, decides that, hey, we don't want 5 people playing in the games anymore, from now on it's going to be 4, well, what is it that anybody can do? Nobody can do anything except for you say, either I'm not going to play basketball anymore or you play by the rules. So if they decide to manipulate that, there's nothing that can be done. Or if they decide to say, come up with a new rule or take away a rule that is already in existence and say, this is how we're going to start playing it, is that not manipulation? Is that not them doing whatever they want to do? Okay, and that's what manipulation really is all about. So the same thing too with the market. But at the end of the day, the rules of the NBA has changed over years, and there's still people out there making tons of money. Okay, you might not like the way they're doing it, but at the end of the day, that's just the way it is. So everything is manipulated, including the financial markets. The question is, do you know how to play the game the right way? Okay, and the charts gives you the advantage of learning how to play it the right way. So that's why we teach that over here. So enough of my soapbox. I'm gonna get off of that and just go back to the fact that when we look at the chart, let me go to the SPX. Okay, one of the things I mentioned was the fact that, you know, we don't want, you know, it's not uncommon for the market to pull back again to either that line or this line before it starts going higher again. So until we see it close below here, you know, nobody should be worried about this market going down just yet. Okay, when the close goes below here, then I'll say start worrying about it. Until then, stay on the right side with confidence is what we always teach, right? And that's what I'm telling you guys to do. Learn how to read the charts. Go to our website. You'll learn how to see, you know, and read charts. You can really, literally read that. Take some of our courses. Contact us. Look at our blogs. You know, take our courses. Sign up for our private mentorship where I coach you one-on-one on how to see the market the way it really should be. And no longer should you be saying this is what somebody said or that is what somebody else said, but more so like this is what I see, and let the market confirm your analysis. Okay, now you don't need me, you don't need anybody else teaching, you know, how to trade the market to tell you what is right or wrong. Let the market be able to do that, because that's the ultimate teacher. Okay, so I'll end on that note, and as always, remember to trade on the right side with confidence.